Hey everyone, welcome back to Investing Talk Podcast. Today we are going to be looking at Hoth Therapeutics, ticker symbol HOTH.
Oh yeah, Hoth Therapeutics, definitely a company to keep an eye on, especially with their recent success, their phase 2, a clinical trial.
Yeah, you're talking about their topical gel, right?
Ah,
HT001. The one that had a 100% success rate, treating skin toxicities from cancer treatments.
mm-hmm.
That's going to be pretty huge for cancer patients.
It's massive, and it's pretty rare to see that level of success, in an early stage clinical trial. So this suggests that they might be onto something really groundbreaking when it comes to addressing these side effects that are just so debilitating for patients.
Yeah, no wonder their stock price went up 215% in a single day, hitting $2.28 a share. That's the kind of news that gets investors excited.
For sure, for sure. But, before we get too excited, we do have to remember that, biopharma, it's a bit of a roller coaster, right? Even with that jump, Hoth Therapeutics stock is still down about 39% over the past year. So, this sector is known for its volatility, and investors need to be prepared for the ride.
Okay, so a healthy dose of caution is always a good idea. But even with that in mind, Hoth Therapeutics just got an exclusive patent license for an obesity treatment. And they're partnering with the U.S. Department of Veterans Affairs and Emory University. That's got to give them a competitive edge, right?
No, absolutely. It shows that they're, diversifying their portfolio. They're not just relying on one product, this partnership, and, their financials are looking pretty solid too, more cash than debt. So it seems like they're in it for the long haul.
Okay, that's encouraging.
Yeah.
Especially since their stock price has been a little bit all over the place lately, hitting a 52-week high of $1.73, but also having some, pretty sharp dips. Makes you realize you got to look beyond just the headlines and dig a little deeper.
Absolutely. That's where a little technical analysis can really help us out. Looking at things like the moving averages, the 50-day, the 200-day, and then also the RS. I can give us some clues about the stock's momentum and its potential future direction.
Okay. All right, you got my attention. Break it down for me. What are those indicators telling us about Hoth Therapeutics right now?
Okay, so the 50-day moving average is currently sitting at about 84 cents, and the 200-day is around 96 cents. Both are significantly lower than Hoth Therapeutics' current trading price. So this indicates, some pretty strong positive momentum.
Okay, that sounds promising, but there's always a but, right, when it comes to the stock market.
Oh, yeah. And in this case, the but is that the RSI is currently above 70. So this suggests that Hoth Therapeutics might be getting into overbought territory. Now, that doesn't necessarily mean a crash is coming, but it does signal that maybe we should be a little cautious.
So we're seeing positive signs and some potential yellow flags. What does all of this mean for someone like me or any of our listeners out there who are thinking about investing in Hoth Therapeutics? Should we jump in or should we maybe tap the brakes a little bit? Yeah, that is the million-dollar question. And based on everything we've talked about, my recommendation for Hoth Therapeutics right now is a hold position. It's not about, rushing in. It's about monitoring their performance, keeping an eye on the upcoming earnings reports and looking for any news about their clinical trials or partnerships. Biopharma is inherently risky, so patience is key. Okay, so you're saying a wait-and-see approach makes more sense for now. Makes sense, especially in a field as complex as biopharmaceuticals.
Exactly. It's about making informed decisions, not letting emotions drive our choices.
Couldn't agree more. We've covered a lot of ground already, and I think our listeners have a much clearer picture of what's happening with Hoth Therapeutics. But before we move on, I want to go back to something you mentioned earlier. You talked about their stock price surge after the clinical trial results, but also how it's been trending downwards over the past year.
Right. It's important to consider both short-term and long-term trends.
And that brings us to a crucial point, volatility. We've mentioned it a few times, but I want to make sure our listeners really grasp what we mean by that. What exactly is volatility in the stock market?
So volatility essentially refers to how much the price of a stock fluctuates over time. Think of it as how bumpy the ride is. A highly volatile stock will experience dramatic swings, both up and down. And as we've seen with Hoth Therapeutics, biopharmaceutical stocks tend to be more volatile than many other sectors.
So why is that? What makes the biopharma world so susceptible to those wild swings?
Well, it boils down to a few key factors. First, the nature of the industry itself. It's inherently risky. Developing new drugs and treatments is a long and complex process with a high failure rate. Even if a company shows early promise in clinical trials, there's no guarantee those results will hold up in larger trials or that the drug will actually get approved by regulatory agencies.
So there's a lot of uncertainty baked into the process, which translates to uncertainty in the market.
Exactly. Investors react to every bit of news, positive or negative, and that can lead to those dramatic price swings. Imagine a company announces positive results for a potential blockbuster drug. The stock price is likely to surge as investors get excited about potential profits. But if that same company later announces the drug failed a later stage trial, the stock price could plummet just as quickly.
So it's almost like a high-stakes game of chance.
You could say that, but it's not just about luck. Savvy investors do their research, they understand the science behind the treatments, and they carefully assess the risks involved.
So knowledge really is power in this game. The more you understand about the biopharmaceutical industry, the better equipped you are to navigate those risks and make smart investment decisions.
Absolutely. That's where resources like Investing Talk podcast come in. We're here to break down these complex topics and empower you to make informed choices.
Exactly. We're not financial advisors, but we're providing the information and tools you need to do your own research and make decisions that align with your investment goals.
Precisely. Now I think it's time we shift our focus to Hoth Therapeutics financials and delve into what their numbers tell us.
All right, let's talk money. What kind of financial shape is Hoth Therapeutics in?
Well, as we mentioned earlier, they're in a good position with more cash on hand than debt. This gives them flexibility and a cushion to weather any challenges. But to get a clearer understanding of their financial health, we need to look at some key metrics.
Okay, give me the rundown. What are the numbers we should be paying attention to?
Metrics like revenue earnings per share and their debt-to-equity ratio can offer valuable insights into their profitability growth potential and overall financial stability.
All right, I'm ready for a financial deep dive. What do those numbers tell us?
Just remember, I'm not a financial advisor, so this isn't financial advice. Looking at the information, Hoth Therapeutics has been reporting losses in recent quarters. However, analysts are projecting that their earnings per share will improve in the coming year, going from negative $1.18 to negative 87 cents.
So they're not in the black yet, but there's potential for improvement.
That seems to be the consensus. Of course, these are just projections and actual results could vary.
Always good to have a healthy dose of skepticism, especially in the stock market. So their earnings are projected to improve. What about their revenue? Is that growing?
It's a little bit mixed. Their revenue has fluctuated in recent years and there's no clear trend yet. This is partly because they're still in the early stages of developing their products and getting them to market.
Makes sense. They're still in that growth phase, which isn't uncommon for a biopharmaceutical company.
Exactly. They're investing heavily in research and development, which can impact their short-term profitability. But if their products prove successful, that investment could pay off big time down the road.
It's a long game, and they're betting on the future. Now, what about their debt-to-equity ratio? You mentioned that earlier.
Right. The debt-to-equity ratio measures how much debt a company uses to finance its assets compared to the amount of equity it has.
Okay, break that down for me. What constitutes a healthy debt-to-equity ratio?
Generally, a lower ratio is considered healthier because it means a company relies less on debt to finance its operations. A high debt-to-equity ratio can be a red flag, suggesting a company might be over-leveraged and at greater risk if things go south.
So where does Hoth Therapeutics stand on this metric?
Their debt-to-equity ratio has been pretty low in recent years. This is another positive sign indicating they're managing their debt responsibly.
Okay, that's reassuring. Overall, it sounds like Hoth Therapeutics is in a decent financial position, but they're not without their risks. Would you say that's a fair assessment?
Absolutely. Their strong balance sheet with more cash than debt is a great starting point. They're not profitable yet, but analysts predict improvements in their earnings, and their debt-to-equity ratio is healthy. However, they operate in a volatile sector, and their revenue growth has been inconsistent.
So a mixed bag, but with some potential bright spots.
That's a great way to put it. Ultimately, whether or not to invest in Hoth Therapeutics is a decision each individual investor needs to make based on their risk tolerance and investment goals.
Wise words. And just to reiterate, we're not giving financial advice here. We're simply providing information and insights to help you make informed decisions.
Exactly. Now let's shift our focus to something that's been generating a lot of buzz around Hoth Therapeutics, their product pipeline.
Yes. Let's dive into those treatments they're developing. This is where things get really exciting because we're talking about potential breakthroughs that could make a real difference in people's lives.
Absolutely. And that's what makes the biopharmaceutical sector so fascinating. These companies are working on cutting-edge science that could transform healthcare as we know it.
Okay, so what's in Hoth Therapeutics' pipeline? What are they working on?
Well, as we discussed earlier, their most advanced product is HT001, the topical gel for treating skin toxicities caused by cancer treatments. That's the one that achieved that remarkable 100% success rate in their phase 2 a clinical trial.
That's right. And that trial focused on toxicities associated with EGFRI, or epidermal growth factor receptor inhibitors, which are commonly used in various cancer treatments.
Precisely. And those skin toxicities can be incredibly debilitating for patients, impacting their quality of life and even interfering with their cancer treatment. So having an effective treatment option would be a game changer.
Absolutely. It's not just about treating the symptoms. It's about improving patients' overall well-being during a really tough time.
Exactly. Now, beyond HT001, Hoth Therapeutics is also developing treatments for a range of other conditions, including eczema, asthma, and even Alzheimer's disease.
Wow, they're covering a lot of ground. So they're not just focusing on cancer treatments, they're aiming for a diverse portfolio.
Exactly. And that diversification is another positive sign. It spreads their risk and opens up multiple potential revenue streams.
So what's the latest on their other products? Are they as far along in development as HT001?
Some of their other products are still in preclinical development, meaning they haven't started human trials yet, but they've shown promising results in lab studies, which is why Hoth Therapeutics is investing in further research.
It sounds like they're taking a calculated approach, focusing on treatments with strong scientific backing.
That's what it looks like. And that's important in the biopharmaceutical world. You need solid science behind your products to attract investors, secure partnerships, and ultimately gain regulatory approval.
It all comes back to the science. So we've talked about their financials, their product pipeline, and the inherent volatility of the biopharmaceutical sector. But there's one more piece of the puzzle we need to discuss: market trends.
You're absolutely right. We need to understand the broader context in which Hoth Therapeutics is operating. What are the major forces shaping the biopharmaceutical industry right now?
Let's dive into those trends and see how they might impact Hoth Therapeutics' future. What are some of the key trends we're seeing?
One major trend is the increasing focus on personalized medicine. This is all about tailoring treatments to individual patients based on their unique genetic makeup, lifestyle, and environmental factors.
That sounds like the future of healthcare. No more one-size-fits-all approaches.
Exactly. And Hoth Therapeutics is actually well positioned to capitalize on this trend. They've developed a proprietary platform called BioLexa, which uses artificial intelligence and machine learning to identify and develop new drug candidates.
So they're embracing cutting-edge technology to drive their research and development.
Absolutely. And that gives them a competitive edge.
Hmm.
BioLexa allows them to analyze vast amounts of data, identify potential drug targets, and develop personalized therapies more efficiently.
That's impressive. Sounds like they're staying ahead of the curve.
They're definitely making moves in that direction. Now, another major trend we're seeing is the rise of gene therapy. This is an incredibly exciting area of research that involves modifying genes to treat or prevent disease.
That's right. Gene therapy has the potential to cure previously untreatable conditions. It's truly revolutionary.
It is. And while Hoth Therapeutics isn't currently focused on gene therapy, it's something they're keeping a close eye on. They've even hinted at the possibility of incorporating gene editing technologies into their BioLexa platform in the future.
So they're open to exploring new avenues and expanding their horizons. Always good to be adaptable in a rapidly evolving industry like biopharmaceuticals.
They seem to be. Now, there's one more trend I want to mention: the increasing role of artificial intelligence in drug discovery and development.
We touched on this earlier with their BioLexa platform, but it's worth emphasizing AI is transforming healthcare in so many ways.
Absolutely. And it's not just about identifying new drug candidates, it's also about streamlining clinical trials, improving patient outcomes, and reducing healthcare costs.
So Hoth Therapeutics is leveraging AI to be more efficient and effective.
They are, and that's another reason why I'm keeping a close watch on them. They're embracing the latest technologies and positioning themselves for success in a rapidly changing industry.
It sounds like they're doing a lot of things right. But as we've discussed, the biopharmaceutical sector is inherently risky.
That's the reality. There are no guarantees in this business.
No.
But by understanding the key trends shaping the industry, and by carefully evaluating companies like Hoth Therapeutics, investors can make more informed decisions and potentially reap the rewards of this exciting and innovative sector.
Great insights. So we've covered a lot of ground in this part. We've talked about Hoth Therapeutics' breakthrough clinical trial, their patent license agreement, their financial health, their product pipeline, and the broader market trends shaping the biopharmaceutical industry.
We've certainly had a comprehensive discussion.
We have. But before we move on, I want to circle back to something we mentioned earlier: analyst ratings.
Yes. Those can provide valuable insights into how professional investors view a company.
Exactly. So what are the analysts saying about Hoth Therapeutics? Are they bullish, bearish, or somewhere in between?
Well, it's a bit of a mixed bag, but leaning towards the positive side. Several analysts have issued buy or outperform ratings on Hoth Therapeutics stocks, citing their promising clinical trial results, their innovative technology platform, and their potential for growth in the coming years.
So some Wall Street experts are betting on Hoth Therapeutics' success.
They seem to be. Of course, it's important to remember that analyst ratings are just one piece of the puzzle. They're not always accurate, and they should never be the sole basis for an investment decision.
Always good to have a healthy dose of skepticism.
Absolutely. But it's still valuable information to consider. Now, on the flip side, some analysts have expressed concerns about Hoth Therapeutics' lack of profitability and the inherent risks of the biopharmaceutical sector.
That's fair. We've acknowledged those risks throughout this part. It's important to be realistic.
Precisely. So the overall picture from the analysts is cautiously optimistic. They recognize the potential, but also acknowledge the challenges.
Sounds familiar. It's the same message we've been emphasizing throughout this part.
It's a theme that runs through the biopharmaceutical sector. High risk, high reward.
Well said. And that brings us to the end of this part. We'll be back in the next part to continue our discussion. Don't go anywhere.
Welcome back to Investing Talk Podcast. Before we left off, we were talking about the analyst ratings on Hoth Therapeutics.
Right. And it sounds like the general feeling is cautiously optimistic.
Yeah. They see the potential, but they're not, ignoring the challenges. It's a classic high-risk, high-reward situation. You see that a lot in the biopharmaceutical industry.
Which brings us to another important thing to think about when we're evaluating Hoth Therapeutics, their competition. Every company has competition, and understanding that landscape can be really helpful for investors.
For sure, absolutely. In the biopharma world, competition is fierce. Companies are constantly, fighting for funding, for partnerships, for market share. So let's take a look at who Hoth Therapeutics is up against.
Sounds good. Who are the major players in their space?
Well, since Hoth Therapeutics is developing treatments for, a variety of conditions, their competition really depends on the specific area. For example, when it comes to those skin toxicities related to cancer treatments, they're competing with companies like Incyte and Regeneron Pharmaceuticals.
Whoa, those are some big names.
Yeah, they are. Both Incyte and Regeneron have a history of developing and putting out successful treatments. Incyte, for instance, has a drug called Jakafi that's approved for certain myeloproliferative neoplasms, which are cancers that affect the bone marrow. And then Regeneron has Dupixent, which is used to treat atopic dermatitis, which is a type of eczema and asthma. So Hoth Therapeutics is definitely facing some tough competition.
It sounds like they're going up against some heavy hitters. How does Hoth Therapeutics make themselves stand out from these big companies?
That's a great question. One way they're trying to stand out is through their focus on innovation. We talked before about their BioLexa platform, which uses artificial intelligence and machine learning to speed up drug discovery and development. This technology could give them an advantage when it comes to, finding new drug candidates and getting them to market faster.
So it's about using technology to gain that competitive advantage.
Exactly. And it's not just about speed. BioLexa also has the potential to improve the efficiency and accuracy of their research, which could lead to better treatments. Another way they're trying to stand out is by focusing on more niche areas within those larger treatment areas. For example, while Incyte and Regeneron have treatments for atopic dermatitis, Hoth Therapeutics is focusing on a subtype called prurigo nodularis, which is characterized by those really itchy nodules.
So they're carving out their own space within a crowded field.
Exactly. By focusing on these niche areas, they're addressing unmet medical needs and potentially, facing less competition from those bigger companies that might not be focusing on those specific conditions.
Okay, that's a smart strategy. But let's be real. Competing with those giants is a tough job.
Yeah.
What are some of the challenges that Hoth Therapeutics faces in this competitive landscape?
Well, one big one is resources. Incyte and Regeneron have much greater financial resources, research capabilities, and just marketing power. This makes it tough for Hoth Therapeutics to compete on the same level, especially when you're talking about things like large-scale clinical trials and commercializing their products.
It's kind of like a David versus Goliath situation.
You could say that, but David had his slingshot, right?
Right.
For Hoth Therapeutics, their slingshot is their focus on innovation and their strategic approach. If they can keep developing those groundbreaking treatments and target those niche areas, well, they have the potential to really make a space for themselves in the market.
It's a reminder that in investing size isn't everything. Sometimes it's those smaller companies that shake things up and see a lot of success.
Absolutely. And that's what makes biopharma so interesting. It's full of surprises. You never know who's going to be the next big winner.
Now let's talk about something that's on a lot of investors' minds, the future prospects of Hoth Therapeutics. What does the future look like for this company?
That's the big question, isn't it? Predicting the future is always hard, especially in an industry as fast-moving as biopharmaceuticals. But based on what we've talked about so far, there's reason to be optimistic, and there's reason to be cautious.
Let's start with the good stuff. What are some things that could help Hoth Therapeutics succeed in the future?
Well, one key thing is their pipeline. We've talked about their main product, HT001, for treating those skin toxicities. If this product keeps showing good results in clinical trials and gets approved, it could bring in a lot of revenue for them.
Especially because there's such a need for treatments for those side effects.
Exactly. And it's not just HT001. Hoth Therapeutics has a whole pipeline of products targeting a bunch of conditions, from eczema and asthma to Alzheimer's. If even just a few of these products work out, it could really boost the company's growth.
So their diverse pipeline is a big plus.
Oh yeah, for sure. It spreads their risk and gives them more chances of succeeding in the long run. Another thing that could help them is their technology platform, Alexa. We talked about how this platform can speed up drug discovery, but it could also attract partnerships with those bigger pharmaceutical companies.
So Alexa could lead to growth and bring in some valuable partnerships.
Absolutely. Those larger companies are always looking for new technologies and new drug candidates. If Hoth Therapeutics can show how good Alexa is, it could open up some big opportunities, giving them more resources and expertise.
Okay, that sounds promising. But like you said before, there's some reasons to be cautious too. What are some challenges or roadblocks that they might run into?
Well, one challenge we talked about is the competition. Hoth Therapeutics is going up against some really big companies with tons of resources and experience. It's hard to say if they can compete effectively in that environment.
So competition is a hurdle they have to clear.
Yeah, it is. Another challenge is just the risk that comes with drug development. As we've said, developing new drugs is long, complex, and expensive. There's always a chance that things won't work out in clinical trials, or they'll hit regulatory roadblocks even if they look good at first.
So even with a strong pipeline, success isn't a sure thing.
Sadly, that's the truth in biopharma. It's a high-risk, high-reward game. Another potential challenge is their finances. While they have more cash than debt, they're not making a profit yet, and it's hard to say when they will.
So their financial stability is something to watch.
Yeah. They'll have to manage their spending well and make sure they have enough money to keep going with their research and development. This might mean they need to raise more money, which could change things for the current shareholders.
Those are all important things for investors to think about. It shows that investing in biopharma companies means doing your research and being okay with some level of risk.
For sure. Absolutely. It's not for everyone, but for those who are comfortable with the risk and believe in Hoth Therapeutics, it could be a good investment.
Now, before we wrap things up, I want to touch on those market trends again. We talked about how things like personalized medicine, gene therapy, and the use of artificial intelligence are shaping the biopharma world. How do you see these trends affecting Hoth Therapeutics?
That's a good question. I think these trends are both good and bad news for Hoth Therapeutics. On one hand, they're in a good spot to benefit from these trends. Their Alexa platform uses AI and machine learning, which are becoming more and more important in drug development.
So they're already ahead in some ways.
They are. And their focus on personalized medicine targeting specific types of diseases could give them an advantage as we move away from those one-size-fits-all treatments.
So they're embracing the future of healthcare.
It seems like it. But these trends also present some challenges. The fast pace of change in biopharma means Hoth Therapeutics will need to keep adapting. They'll have to keep up with technology, keep investing in research, and bring in the best people to stay on top of the industry.
So being innovative now isn't enough. They have to keep pushing forward.
Exactly. The biopharma world is constantly changing, and Hoth Therapeutics needs to be flexible to succeed in that environment.
Okay, so as we wrap up our look at Hoth Therapeutics, what are your final thoughts?
I think Hoth Therapeutics is a company with a lot of potential, but also a lot of risks. They're in an industry that changes a lot. They're not profitable yet, and their future depends on whether they can develop and sell their products. But they also have some good things going for them, including a promising pipeline innovative technology and a focus on those niche treatment areas. Whether they'll ultimately succeed is hard to say, but they're definitely a company to keep an eye on.
Great insights. It sounds like Hoth Therapeutics has both risks and rewards, and investors need to really think about those before making a decision. Welcome back to Investing Talk Podcast. We've spent this episode taking a close look at Hoth Therapeutics, ticker symbol HOTH.
Yeah, we've covered a lot of ground, from their clinical trial for skin toxicities to the obesity treatment patent license.
We've looked at their financials, their pipeline, the competition they face, and even those big market trends that are affecting the whole biopharma industry.
It's been a pretty thorough overview. I think our listeners have a good grasp of what Hoth Therapeutics is all about.
And as we wrap up, I want to kind of sum up everything we've talked about. What are some key takeaways for our listeners who are interested in maybe investing in Hoth Therapeutics? What are your final thoughts?
Well, I think the main thing is Hoth Therapeutics. It's a classic high-risk, high-reward situation. They're a smaller company in a really fast-moving sector. They aren't profitable yet, and their success depends on them developing and selling their products.
So not exactly a sure thing, huh?
No, not really. But for investors who are okay with a bit more risk and who believe in what the company's doing, it could be a really interesting opportunity.
So it's a bet on their ability to innovate and make things happen.
Yeah, exactly. And that's what makes it so interesting. They're trying new things, like their BioAlexa platform with AI and machine learning to speed up drug discovery, and they're targeting those niche areas within larger treatment areas, which could give them an edge.
So they're not just following the pack, they're trying to forge their own path.
Exactly. And that's what often makes the difference between the companies that succeed and the ones that don't.
Okay, so we've talked about a lot of good things about Hoth Therapeutics, but it's important for investors to understand the risks too. What are some downsides or challenges they should know about?
Well, the biggest one, like we've mentioned, is the competition. They're up against some major players and biopharma companies with a lot of money and experience. So Hoth Therapeutics needs to be smart and efficient to compete in this market.
So they have a tough fight ahead of them in terms of competition. Any other red flags investors should watch out for?
Well, their financial situation, while good right now, could become an issue. They're spending money on research, and it's not clear when they'll start making a profit. They might need to raise more money later on, which could affect the value of existing shares.
So their spending and the possibility of future dilution are things to keep in mind. Any other words of warning?
Don't forget, biopharma is unpredictable. Developing drugs is a long shot. It's expensive, and often things don't work out. Even if Hoth Therapeutics products do well in early trials, there's no guarantee of ultimate success. There can be setbacks at any point, and that can really hurt the stock price.
That's a really good point. Investors need to be realistic about the risks. It's not just about potential rewards.
Right. It's about being informed, making decisions based on a clear understanding of both the good and the bad.
Well said. So to wrap it all up, Hoth Therapeutics is a company with potential but also with some risks. Investors who are thinking about buying their stock need to do their research, weigh the pros and cons, and decide if the possible rewards are worth the risk.
Exactly. And that's where resources like Investing Talk podcast are so helpful. We're here to give you the info you need to make smart choices.
Exactly. We're not financial advisors, but we're here to help our listeners become better, more confident investors.
And remember, knowledge is power. The more you know about the companies and industries you're investing in, the better decisions you'll make.
Couldn't agree more. Well, that wraps up our look at Hoth Therapeutics. We hope you found this episode helpful, and if you did, please subscribe to Investing Talk Podcast. Share it with your friends, and leave us a comment with your thoughts on Hoth Therapeutics. We love hearing from our listeners.
Until next time, happy investing.